to our next episode of Paris and Baz Weekly Market Wrap, where we discuss with you the things that are happening in the market in terms of rentals, sales, and finance, the three services that we provide. And it is a weekly episode that we do, weekly update of what we've seen in the market, our on the ground, sort of putting our feelers out there to see what and bringing to you what we are seeing in the market in terms of buyers, tenants, and mortgage clients. So hello to everyone coming on. We are live on Facebook and Instagram. So the three things that we're going to be discussing today. So in terms of sales, the rise of off-market listings, which is it shows you what we have, how the market's changing in terms of the number of buyers that are out there at the moment. In terms of rentals, there is a new bill that is being proposed, the rental fairness bill. So we'll discuss a little bit more about that. So if you're in the market looking to rent, what that means for you. And in terms of finance, we are starting a topic called Mortgage Mythbusters. Because one of the questions that we get regularly asked these days is it really hard to get a loan these days? I mean, with all these interest rate rises and everything that we're seeing, how hard really is it?
To get a loan,
Absolutely. So starting off
with
off-market sales.
Yes, I think there's an increase in off-market transactions happening at the moment. Stock is quite tight. A lot of buyers out there, what we're seeing on the ground, especially up to 1.5-1.6 mil mark. The market is quite hungry at the moment. So even with the rate rises, we're seeing a lot of buyers come through the properties. Not enough stocks, not enough variety out there. So there is competition. So if you are looking to go to market, I think it's a great time to go.
Absolutely.
You don't know what's going to happen next couple of months with new listings coming on the market.
Yes.
There's going to be a flood on the market. So so if you're looking to go now, probably another one or two rate rises, probably more potentially. But I think people have come to terms with the rate rises now. So I think it's the rates will eventually start dropping. Hopefully, they're saying end of this year,
early next
year.
Yep.
So good times ahead. So if you're looking to buy, buying and selling in the same market, you can't really lose as well, especially if you're upgrading. So I think it's a great time to upgrade as well.
Absolutely. So in terms of, as we've mentioned, off-market listings, if you are wanting to test the waters, not really sure what would happen when you do go to market, one of the strategies that we present is our off-market opportunity, which is mainly on our social media. What you are, for example, watching us. We do a lot of live videos, which speaks to a lot of buyers that are actively looking, or not even actively looking, and just passive buyers that are just interested to see what we've got showcasing. So if you are in the market looking to sell, get in touch with us to see how we can help you with our $0 marketing, which is basically on our social media, testing the waters, see what the market has to say with a valid contract of sale, of course, and an agency agreement. We can help you out from there. So as a number of sellers are withholding the sale because of the news out there being that, look, the market is going down and interest rates are affecting borrowing capacity. Yes, that is the case for some segments of the market, but as we've discussed, if your property is in that sort of 1.5-1.6 range, we have spoken to so many buyers just in the last week, in the last 2 days, that are finance approved, ready to go, and just waiting for that listing. So get in touch with us to see how we can help market your property on an off-market way. And obviously, if you are looking at buying, do get in touch from there as well to register your interest for our database email distribution as well.
And I think what's on the back of that, why that market has become stronger is that originally those buyers that had a borrowing capacity up to $2 million, because of the increase in interest rate rises, their budget has come down, so which has made that
compressed it. So there's more buyers now that previously were looking. Previously looking in the higher price point, now have to adjust and reduce, and that's why there is more competition in that bracket.
In that market, correct.
Absolutely. So, moving on to the next one, rentals. So one of the bills, so the proposed legislation, if this does go through the different houses in our political system, is the rental fairness bill. So basically, what that means, this was introduced last year in December as well by the previous party, where agents were no longer allowed to solicit an amount if there is a higher amount of rent. And one of the changes, or what we weren't sure of at that time, was, are we able to disclose what the higher offer that we get? Because some of our tenants were saying, well, look, it's not fair if I don't even know what the highest offer is. How am I supposed to know what to put an offer for? So basically what's being proposed is, every rental listing must have a price. If that price has been updated because you've got applications that are higher than the advertised price, the advertisement needs to change to that higher amount so that there is disclosure of whatever the market is willing to pay for it. So if there's a subsequent open home after applications have been received, so every time that happens, we have to disclose that.
Yep.
And we can let you know if asked about what exactly the offers are. So if that is something that you want to decide to match, or whatever the case might be, that is something that you can put forward. Now, the reason for this being introduced was to not have like a third party or an agent coming in to say, look, this is the offers, can you increase until you go to that stage.
For more transparency.
Yeah, far more transparency.
Everyone has an equal opportunity trying to get the rental property.
Absolutely. And look, there is still a gap, as we were talking, I think, last week as well, where the rents have gone up by $100 a week. The repayments have gone up $500.
Correct.
There's still that discrepancy there for the owners.
I think with the rate rises, even with the increase in rent, it still won't match for the landlords to match their repayments, but still there's a bit of incentive there.
Absolutely. Yeah. So that's something that's in the pipeline. That's just in terms of fairness point of view. So if you are looking at renting a property, you can expect to be, have more of that information, so you know what is happening in that space. Moving on to mortgages.
Yep.
Mortgage mythbusters. How hard is it to get a loan?
That's a commonly asked question. How hard is it to get a loan? Look, I think it's still quite easy at the moment.
Okay.
We're getting deals over the line every day.
Yeah.
So obviously it comes down to serviceability. If you've got strong income, your expenses are quite clean, reasonable. Banks are hungry. Banks are hungry for business. So we're not seeing that there's tightening up of lending. So if you're out in the market looking for a loan, do get in touch.
Yeah.
Yes, serviceability is the biggest thing that's changed in the last couple of years.
Yeah. How much you can borrow.
How much you can borrow. So hopefully with the rate decreases next year, serviceability will be quite good again.
Okay, there you
go.
Yeah,
so you can get a loan. It's not all doom and gloom.
Yeah.
So
if you've
got
the,
and there's cashbacks on offer as well with refinancing with multiple lenders out there. But there's 2 banks that have just pulled back from next month that won't be offering cash back. So I think banks have reached a certain stage where they don't want to get that type of business anymore.
The incentives are dropping
for cash back. So, but there are banks out there that we have refinance cashbacks available with reasonable sharp interest rate on offer
as well. And what would be this week's sort of sharpest rate?
Interest rate owner occupied, we're looking around the 5.5 mark.
Okay.
Yeah, depending on which bank we go to, which is still quite reasonable.
Yeah.
Investment rates, so 0.25, 0.3 higher.
0.3 higher. Okay.
So banks are hungry.
Banks, that's what they're in the business for, to make money. So they have to lend to make money.
I think what consumers have to realize is it's a bit of a cycle, obviously, as well. Yes, the rates are higher at the moment. What goes up will come down eventually as well. So eventually banks do have to lend to make money.
That's right.
So just hang in there and get in touch.
Perfect. Well, thank you so much for tuning in, guys. We will be back again next week to bring another update to let you know what else has happened in the market during this week. Any questions at all, or any recommendations of answers, do feel free to get in touch. We would be more than happy to answer those for you live or offline as well. Thank you very much for watching. We'll see you guys next time.
See you guys.